Thank you for joining me for this pop-up live trading session. I have a interesting trade that I would like to do and kind of share with the group here. But before I do that, I'm going to discuss the markets just really quickly to give a few other people a chance to log on. So based on what's going on, we had just like all week, we've had an up and down market. The S&P has been down, it's been up. The Nasdaq has been down, it's been up. The Russell is leading the way again like it was this morning, but that was actually down quite a bit just a few minutes ago. And we are, and so it looks like we're going to end the day somewhat flat, like we were when we were on the trading floor this morning. And then bonds, the 30-year bonds and all the bonds across the border up today. We were talking about this natural gas position that we're in, and that is basically staying flat. We've been up and down on this today in this account, and it's 4 days to go, 2 days, two and a half days of trading, I guess. You have Sunday evening and then Monday, and that's pretty much the end of this. So we'll see if we can get out of this on Monday morning, hopefully. As I talked about earlier, we made some adjustments on it to free up or reduce some of the risks. We have pretty much very little risk on the call side now, but I can't take it off yet. And then the most of the risk right now is the put side at this 24 delta. So we'll see how this plays out for the next 2.5 days, 2 trading days. And then I wanted to talk about a trade idea in Pfizer. Pfizer is coming out with earnings on the 7th, I believe. Let me see, the 27th of October. So next week, today is the 23rd, so next week, and we got this trade that one of the members just sent me, and I really like it because he was the member that sent us the Walgreens trade that we did something similar to this before, that for an earnings trade, and we all made money on it. Some of us a little bit more because we got out of it sooner than others. But this is another iron butterfly, and you can see the risk reward here is pretty nice. We're selling the put and call. You're doing a straddle. An iron butterfly is like doing a straddle and then having some wings. So we're selling the 37.50, and we're buying the 35.50 on the put side and buying the 39.50 on the call side. And the expected move in all probability is based on expiration. We might have to hold this to expiration, or we might have to hold this to earnings come out. And this is the expected was $2, right? So you're receiving 146. He got 150. I'm going to still do it for this 146 because the price is the buying power. You know, the buying power is insignificant, and the max loss is the same, right? Because this is regular T margin. So I really like the risk reward here. This is one of those rare times that as the option seller, your reward is bigger than your risk. And this is significantly bigger than your risk. So I'm willing to take this 146 and to the potential max loss of $54 or $56. So it's changing on us, unfortunately, and it's getting less and less while I'm talking, but that's still fine. I still want to do this trade. So let me know if you're on the call, if you're going to do this this trade as well. Once again, this is like the Walgreens trade we did for an earnings trade about a week and a half ago or so. We did the same type of trade, an iron condor that had an amazing risk reward. So we're going to send this and see what happens here. So I'm going to activity, close that out here. Going to activity, and now the mid is 144. So I'm going to lose a little bit more than this to get filled. Maybe you can hold off. I don't know, but I'm going to send this. Still not bad. I like the risk reward. Still don't have it. All right, so they're going to make me go to probably the 143 to get filled. That's a bummer, but hey, I still like the trade. All right, so I'm going to send that, and it got filled at the 1 143 or $136 afterwards. So you can see that what I'm going to try to do is get out of this position before earnings if I could, right? Let's say I got 30% profit or something like that. I will do that, but most likely you're gonna have to hold this to expiration, or excuse me, hold this until earnings come out. So what I would do is put this in at, let's say, 60%, 70%, 75% before the earnings come out, so that when the bell opens, if you can get filled at a really good price, then great, because this could potentially move at least earlier on when these earnings come out. The earnings come out on the 27th, and I believe, let me see, just check, should have checked this already, but I'm gonna check it now. The 27th is Tuesday, and let's see if that is a morning or a, let's see if that's a morning, or evening time that they're gonna bring it out. So I'm just gonna go to this earnings calendar here, and we're gonna check. So we got this week, and then we got next week, right? So let me just check that. What's the dates here? Let's just look at October the 27th, see if they would give it to us here. All right, so October the 27th, Pfizer should be on here. So let's see. There we go. So it's before the opening. So this is one of those times you want to make sure you have, I'm looking right here. This is Pfizer. It's before the opening on the 27th. So you want to know, you want to be able to put this in so that it can be filled when the market opens. So for example, this is the problem some of us did on Walgreens. We didn't have the position open, and you could have got filled right away. And if you didn't, you had to wait longer in the day to be able to get, more of the profit. But all of us got a profit. So anyway, I'm going to put this in, and let's put this in like this, and let's see if we can get a percentage. So let's look at 70% here. I'm just going to put this in there now, and then we got we received like 130 after fees and commissions, 138. I think we got filled at 143 or something like that. So we're going to put this in, and we're going to send it. And actually, I should have put a good to cancel. Let's see if we can replace that, see if it could be a good to cancel or not. It's already a good to cancel. Then when you put in that percentage, it's already a good to cancel. All right, so perfect. All right, so that's going to work for us until we can get filled on that. All right, so any questions about this trade before we conclude with this live pop-up trading session? Any questions about this trade? Anyone else doing this trade? All right, so Dale, you're doing this trade as well. Awesome. So that's pretty cool. Let's see if we can, see whoever else does it as well, to see if we can make some money like we did with the Walgreens again. I really like these type of trades. Even if we lose on this, the risk reward is worth it. So all right, so Andy is attempting the trade too. Julie is attempting the trade. All right, awesome. Actually, Julie is in the trade as well. So awesome, Julie. All right, so this is, just to kind of explain this again, this is an iron butterfly, and it's basically doing a straddle. And a straddle is when you sell the at the money call and put at the same time. But with a straddle, you have unlimited risk you have risk to zero on the put side, and theoretically unlimited risk to the upside. But when you buy the wings, it turns into what is called an iron butterfly. Okay, and that limits your risk. And in this case, we're receiving so much premium that our risk is very little. It's 50, 51, 53, whatever, $54 that it was. If you can get filled at a better price than I did, then the more you collect, the less risk you have. But I still think that the risk that we were taking, including fees and commissions, about $60, that was insignificant based on how much we can make on this. All right, so
hey, I had to step away for a minute. What'd you get filled at? Because I'll go in with you.
Okay, awesome, Ernie. I got filled at 143. So let's see what it's trading at now. Maybe you can try to get better. So maybe you can get 145 right now, Ernie,
Let me see.
or
I'll set it
even
up.
144.
What'd you say? 37.5?
Yes. So
Sell
you,
it, sell it and
yes,
sell it.
correct.
And then buy the 35.5 and the
Hmm.
39.5.
Correct.
Let me see if I got this right.
So
Sell the 37.5, sell the 37.5, buy the 39.5, buy the 35.5. My midpoint says 145. Is that where you were?
correct. So that's actually Thinkorswim has been correct on options on stock, and this is option on stock. So yeah, try to 145. I got filled at 143. You might get filled at 144 or even 145. The better, if you can get better, and that's great, you know. So let us know if you get when you get filled, Ernie.
Yeah, I placed it. I'll let you know. Hadn't filled yet. I'll go to
Okay.
144, see what happens.
Okay.
No, 143 coming up.
It just went to 146. So, but yeah, if you do 143, you're getting filled.
There it is, 143.
Okay, perfect. So awesome. So we got several people in, so appreciate it, everyone. I will obviously have this trade in the Telegram area and so forth, and I'll let you know when I'm getting out. But right now, on the TastyWorks platform and on the Thinkorswim platform, you can put in a good to cancel on these options on stock, and so put in the price that you want. I put in at 43 cents. That is 70%. And if it gets filled, then that would be a 70% profit. And if it doesn't get filled, I'm sure we're going to be able to get out of this. The probability of getting out of this with some type of profit is very, very high.